This is Taking Stock on Bloomberg. I'm Pimm Fox. All right, hedge funds, alternative investments, trying to, in a sense, breathe new life into perhaps portfolios that have been battered by the financial debacle of the last 18 to 24 months. My guest, Stephen Ardizzoni of Cantor Fitzgerald. He's the head of a new division at Cantor, the Investment Advisors division. You know, Stephen, you bring a lot of background from the world of fund-to-funds and hedge funds, really understanding the hedge fund business. Sure. What are hedge funds looking for right now? Is everyone kind of trying to reset everything to zero and kind of make sure that they've got their investors lined up and they're not going to get any capital calls? Or what's the story?
Yeah, I mean, I think 2009 was really a tale of trying to repair their internal balance sheets and relationships, obviously, with clients. So, you know, putting money out to work is one thing, but then also running a hedge fund, you have this liability issue of your investors coming in, and then all of a sudden they have redemption requests. And as we saw with many fund-to-funds in 2008, it causes a run on the bank, which obviously builds inherent business risk into the hedge fund model. So I think some of that has been repaired over 2009. But I think some of the themes are, one, for hedge funds to, one, identify what the weakest links are in their food chain in terms of clients coming in and where they do see pressure points, to making sure they have a fundamentally sound business. And then two, when they're actually deploying capital, it's an interesting time right now, because I think 2009 was really a story more of a beta play, with all risky asset classes basically rising on this, this buoyancy effect that we talked about previously. In 2010, it becomes much more of a story of really looking to drive value. And I think it's more eventy type situations, corporate restructuring, spin-outs, M&A activity, and distressed assets still. I mean, it's, like I said, lower down in the food chain, I think there is ample opportunity to put money to work. But the old saying goes, it's easy to put money out to work, but it's much more difficult getting that money back. So I think a lot more time from the portfolio manager standpoint is really spent on going over the investment thesis and really trying to drive value, where in 2009 they could really rely more just on beta in the market itself, just curing itself.
Let me push in. Are you also finding that the opportunity for a brokerage firm like a Cantor Fitzgerald is because so many of the big banks that used to have whole operations catering to hedge funds, offering all of this advice and all of this strategy that we're talking about, they don't want to do this anymore very much. They'd rather just maybe trade with the central bank and maybe earn a spread on something that's a little bit more plain vanilla. Right. And so this is, am I getting this is why there's the market opportunity for you?
Yeah, I think you hit the nail on the head. And it's not even just an issue of them wanting to just kind of pull back the reins. They're being forced to effectively, with government regulation and oversight. So, going back to a, regime that were Glass-Steagall-esque, right?
It may not be written in stone. But someone's getting an email saying, look, this is not the kind of business that we're necessarily going to be chasing.
Oh, and at Cantor, I mean, you're starting with a clean slate. I mean, there's no legacy issues. We're not regulated by the FDIC. We can still be opportunistic and look for creating value. And I think there is a massive opportunity right now as these banks start shedding prop desk and teams out because they don't want that risk, for somebody like a Cantor to come in with institutional infrastructure and really with a strong brand name to really build up a presence in the asset management business.
So are you hiring? I mean,
we are actively. You're
actively hiring. So everyone who's listening or watching, I mean, if you've got the skill sets or the experience, this is a good place to go.
I think so. I mean, if you're a smart, ambitious, opportunistic, and commercial thinker, I definitely think Cantor is a great platform to implement your game plan.
Talk a little bit about that whole idea of platforms, because a platform, I know about waiting for a train as a platform, but in the hedge fund business, a platform is what really connects the hedge fund to the investor set.
True. So, like, in the platform instance of a hedge fund, right? So it's, whether it's a large public firm like OZ or somebody like that. I mean, they have a platform of different types of products across different types of, geographies.
OZ,
OXIF, exactly.
Yeah, okay, just making sure.
Yeah, as an example. And, the thing, it's become an interesting situation now because, prior to 2008, it was much more focused on building kind of large multi-strat type organizations, and post-2008, it's become much more siloed. So organizations, as opposed to just putting everything into one captive fund or one captive platform, they're going to investors saying, listen, if you have longer duration needs, we can put together a private equity type structure for you so you don't have that asset liability mismatch. And if you're interested in more liquid type themes, then you can go into the main fund and we'll just do, basically basically investing in long-short equity. So you really don't get, the cross-pollination of illiquid investments into liquid pools, which really caused a lot of headaches in 2008. So.
All right. I want to thank you very much for giving us some real insight into what's going on in hedge fund business,
sure.
as well as private equity, private investment vehicles, and sort of the changes that are happening inside of portfolios. Thank you very much.
My pleasure.
Ardizzoni coming in from Cantor Fitzgerald.